Hi guys, welcome back to another episode of the Business and Travel Podcast. My name is Jackson Dean. Today I'm joined by Joseph Snyder, who is the CEO of Lannister Holdings, and I'm also joined by Lannister Holdings CTO Chris Brown. Now, Joseph Snyder, he started his career in real estate, then began working in risk management, where he built an agency into 32 states that served thousands of clients. This is just the beginning of his success, though. Joseph's now the CEO of this publicly traded revolutionary blockchain development company, Lannister Holdings, which is based out of Phoenix, Arizona. Lannister Holdings CTO, Chris Brown, has 14 years of experience in the IT industry. His background is in Air Force intelligence, to earning a dual Bachelor of Science degrees in computational mathematics and biochemistry from ASU. And Chris has been deeply engrossed in the interconnection between real-world business applications, artificial intelligence, blockchain smart contracts, and coding ever since. So I'm joined by these two lovely gentlemen who are going to share a lot of information about blockchain, the Internet of Things, artificial intelligence, and a few other advanced topics today. It is quite interesting to me, considering my background. If you are just joining us for the first time, you haven't heard about myself, I am Jackson Dean. I'm the founder and CEO of Social Growth Media, which is a leading Instagram marketing and SEO company based in Australia, but we have clients and students worldwide in pretty much all continents now. So that's where we are at the moment. But before Social Growth Media, I was heavily involved in the finance industry. So it's going to be really interesting to talk to these guys about what they're doing in blockchain and artificial intelligence and the progress that they're making. Now that we've sort of briefly introduced ourselves, look forward to a really good episode with these guys. Chris and Joseph, welcome to the show.
Thanks for having us.
No worries. Tell us a little bit about your backstory and sort of how we came to what is now today known as Lannister Holdings.
Yeah, we are based out of Phoenix, Arizona. We're very proud to be an Arizona operation. As a publicly traded U.S. company, we chose that structure. We are currently traded on the OTC market under the ticker symbol NBDR, Nancy Bravo Delta Robert. And we chose that structure so that we would have the ability to scale and access capital as needed for scaling out our business, and also really to have some very clear differentiating factors between ourselves and what people were perceiving in the cryptocurrency and blockchain worlds, in 2017 and early 2018. And so that structure put us under the regulatory bodies that exist in the United States and having to comply with quarterly filings and financial statements and compliance and all of these kinds of things. And so it's a grand adventure. And and we are having a great time doing it, learning new things, adapting to challenges and overcoming obstacles as we go. But it's been a great adventure so far. Lannister Holdings was ideated and built to bring what we saw as a really significant gap in the market technologically to real world adoption. The technologies that Chris and our technical teams get to play with, blockchains and their use cases, Internet of Things or IoT, cloud infrastructure, and even some artificial intelligence and machine learning, use cases are really, really, really at the edge, at the bleeding edge of technological disruption. And they are the basis of what we consider as Web 3.0, the next iteration and generation of data and commerce and the internet. And so we went to market specifically with an idea of coming out and educating about these technologies, educating youth around these technologies to make sure that there is a focus, a STEM focus in kind of the middle school to high school range of students, educating executives about how these technologies work individually and also as a suite of technologies put together to solve problems in logistics and use cases and payments and other things. And we've done that by doing a lot of these shows, a lot of media and a lot of communications work, and also by doing a lot of consultative work with organizations and industry groups and individual companies to ideate and drill down into how these technologies can impact their verticals, how these technologies can impact their businesses, and what that value is to them as business owners or executives and their stakeholders.
Yeah, awesome. Awesome. So when did you guys actually list publicly?
So we did a reverse merger in the US. So we acquired a company that was already listed and merged with it. And that happened on March 8th of this year. So fairly recently, we listed in March of this year.
Okay, awesome. And so what are some of the bigger challenges that you've faced since being public?
Oh, so many. I mean, the challenges there were not unknown to us. This is something that Chris and I have looked for a while at different ideas and things to bring into a structure like this. When you're going into a listed structure, the key points that one needs to look for, in our opinion, is scalability and as blue of an ocean as you can get. A blue ocean in business is a space where there's very little actual competition and it's not being commoditized down to the cheapest price. A red ocean space is something where there's a lot of other fish in the space. There's a lot of, teeth gnashing and bone grinding, and you're really getting down to where you're just commoditizing your services. And so we really felt as we came out of our risk management business, we had an exit a few years ago, and we moved into the consultative space where we kind of got to look around and say, hey, you know what? We're in our later 30s. We've had some success in business before, and we get to kind of play with the next thing. So what suite of things do we want to play with, and what adventures do we want to go on? And so as Chris and his teams came out and said, hey, you know what? I think these 2 or 3 things are really, really interesting. Blockchain, IoT, 5G, how these things fit with AI and machine learning systems. And I think that we can really have an impact in the space. And so that was really the impetus for action for us to go through the reverse merger process. We're actively, I spend at least half of my time with securities attorneys and auditors and government regulators, at least half my day. So it's a heavy lift and it's an expensive lift, but it allows us to have a very clear differentiating factor in the market. And it also allows us to look at scaling with a very known cost of capital. And that's really important to us.
Yeah, right. Okay. So the security side of things, everything that I've ever heard sort of about blockchain, and I mean, working with a lot of companies that are in that space, it would appear to like the consumer that there is little to no regulation, but it sounds like you're obviously encountering a lot of regulation. So where is that sort of disconnect? Because we've seen a lot of use cases over the last it's definitely the last year with the whole Bitcoin bubble and so forth, where it appears that the regulatory standards are very, very low. So what are your sort of comments on the actual regulation and what you actually have to do to have a company in this space?
Well, first of all, I'd like to differentiate between blockchain and cryptocurrency. And we believe, and we have always believed, that most token offerings, which are not cryptocurrencies, they are representations of digital tokens on a blockchain, but that most token offerings are, at the end of the day, securities. And that's not a big stretch, right? If you look at the way fractionalization works for an entity, you're issuing a representation of value, a stock certificate, to a person who is acquiring that, and they have some voting rights and an equity stake in your business. We believe that tokens are the essentially the future representations of value for these existing systems. Now, we were very alone in saying that at the end of last year, beginning of this year. And then, the SEC, at least in the US side of things, has come out and kind of reaffirmed that and said, hey, you know what? Most of these are probably securities. We need to look at this. We need to understand this. We have launched an open source project called the Equity Token Project with our partners at Media Shower out of Boston. And that project is about opening up those lines of communication, opening up that discourse. We've obviously open sourced a suite of smart contracts and technologies that people can go and access on GitHub and pull down and look at how they can issue out tokens for their equity offerings. There's a whole legal ramifications and filings and things that need to go with that obviously we're not providing because we're not lawyers. But this is how we see the future of these technologies getting used, is within regulatory structures, within existing business environments. Many regulations exist for really good reasons, right? Some are erroneous, some are onerous, but overall, the idea is that you don't want people to be able to just go open a website and fleece investors. You don't want people to be able to just go raise millions of dollars and run away with it. You want some fiduciary responsibility. You want some security. You want some insurance on those types of offerings, whether it's a debt offering or an equity offering or an asset-backed offering. And so we've gone to market with the message that we believe that the future of these technologies is within regulatory frameworks, and that we believe that the future of these technologies is within existing infrastructure and business, and that's where they actually have the most value and impact, right? We don't believe that the most value out of blockchain is generating large amounts of capital for somewhat terrible ideas with token offerings.
Yeah, it makes absolute sense. I mean, I sort of have seen this firsthand. I was over in Israel recently and working with a few different venture capital firms. And they have seen this huge trend, not just in Israel, but also a lot in Silicon Valley as well, where they had these companies that are trying to raise money for whatever their idea or product or service was. And there was this one example where there was this company trying to raise $5 million, and not a huge amount of money in the VC space or anything. They were trying for more than 2 years to try and raise this money. And then they changed their prospectus to include research and development in the blockchain space, and immediately raised $70 million about 2 months later. And so there's a lot of people in the space using that, you could say a buzzword, but what, in your opinion, is this word? What is this doing to sort of the psychology of the market right now and using this word? And how do you sort of differentiate yourself from everyone else that's sort of jumping on the bandwagon when it comes to, blockchain?
It really comes down to the conversations that you're having and who they're having and who you're having them with, especially from our perspective, or maybe just from my perspective, right? So I'm leading a team of developers who are developing these technologies, and we're also developing IoT technologies and AI technologies. And we're integrating these things and bringing them together and saying, here's how they work, and showing them to potential clients, and also producing some internal products that we can't show off now, but will be coming in the near future here. And the differentiation really is coming down between, are you talking to someone who has an actual business use case and has a system or a platform or an economy or ecology which is benefited by these new technologies, right? So if we're, say, talking to an oil and gas supply company, or a shipping logistics company who brings in stuff through the port of LA, for example, there's a lot of efficiencies there. There's a lot of hiccups and a lot of stop points between multiple actors and multiple players and multiple payment types and times, right? So you have things like net 30 and net 60 payments between each actor along a chain, and you get 3 or 4 actors deep. Suddenly you have long-term debt notes, and they're not even long, right? I'm using long-term as in these are instantaneous transactions. Why am I waiting 60 days to get paid? And so if you have letters of credit going between entities on a supply chain, and those letters of credit are costing you 10, 12, 15%, and they're only lasting 30 or 60 days, but the actual transaction between all of the players in that supply chain happened within, we could call it near instantaneous, but we can say the shipment took off on Friday, it landed in LA the following Wednesday, and then the payment for that actual receipt of shipment and then shipment forwarding happens almost a month later. So in a case like that, you have really strong value points of saying, look, we can remove the entire efficiency lag, and by implementing a technology which allows us to measure with on-the-ground in-situ devices, IoT devices, we can measure the delivery, we can measure the deployment, we can measure the quality or the quantity depending on the items received, and then we can instantly disperse payment, right? So that sort of interaction allows you to actually use a blockchain ecosystem in a very strong and very well-backed manner. That doesn't need you to go, there's fundraising involved, but that doesn't need you to go out and sell tokens to the public market. That doesn't need you to go sell your cryptocurrency to anybody. The only people who are actually interested in the functionality of that blockchain are the 4 or 5 players involved in the processing of the transactions which happen inside that network as it already exists. It's simply making it faster, making it more efficient, and making it more transparent for all the actors along the chain. So, we come back to this question of how do you separate these two things? And it's actually a conversation I had today with another partner of ours. And we were saying, there's this past 2 years, essentially, of just all this hype and all this craziness, and everything you search on the internet is just like, if you go search blockchain on Google right now, you'll get 10 results that tell you completely different things about what it is and how it works and what it does. And at the end of the day, you're talking about a decentralized, distributed ledger system, which allows you to track transactions in an immutable fashion. So we secure the value of every forward-moving transaction such that if you change any of the past transactions, the future transactions are now invalid. So you have a very robust system of looking backwards and saying, here's the exact history of transactions and how all of these transactions occurred and in which order and when. So you have provability along the path. And then additionally to that, you have the transparency of it, right? So let's say you have all of these actors on this supply chain that we're making up as we go along here. And their accounting firm wants to come in and say, okay, when did those transactions happen and who was the recipient in those transactions? Well, you don't have to dig through your records anymore and go find them and give them the paperwork or give them access to your database and then send them over your whichever accounting software you're using. They can simply query against the blockchain that you're using for those transactions, assuming they have the permissions to do so, right? We can make private blockchains. They can query against that and have a nearly non-disputable, right? We'll say nearly for now, but nearly non-disputable record of all the transactions that happened and when and what the payments were. So you can scale that to just immense scales if you really want to, right? I mean, the worldwide shipping industry is immense by itself. And then you can look at everything else that goes around that. So let's say we attached an IoT device to an oil head. So you have an oil well out in the middle of Texas somewhere pumping oil out. Well, every single day that thing's pumping oil, and then every month, every quarter or so, it pays out royalties to the owners of the well, the owners of the land, it pays the leaseholders, it pays the supply companies, it pays the maintenance and repair companies. A lot of those things are a measurable piece of that chain. How much oil did this thing produce? When did it produce it? What quality did it produce at? And when was that taken off as shipment? So anywhere in those chain, you can create measurable data points. And along those measurable data points, you can look at them with an artificial intelligence agent and say, where are my missing efficiencies? What can I do better in this chain? Additionally to that, you can set up transactional pieces using, again, blockchain technologies. You can set up transactions which allow you to immediately disperse those royalties. So now instead of waiting for your quarterly royalty payment for your oil investment, you can be getting daily or hourly or secondly payments if that was what was best for the investors. I'm not saying that's the best possible case, but doing it on a more regular basis, doing it at time of service really decreases your level of loss as it increases your levels of efficiency. I hope I didn't go too far on a tangent there for you.
No, it's good. It's really interesting to me, because at the beginning, I know all of these different industries and they're quite broad. When you say blockchain and then you say Internet of Things and then you say artificial intelligence and machine learning. But I mean, it is a bit technical, but I can see how all of those massively different industries can work together for one different solution, which is really, really cool that you guys are comprising all of those together to get that different solution. But for everyone that is listening and that sort of goes over their heads, this is new. I mean, it's been around only, what would we say now, like really about a decade, the whole idea of blockchain from its very first original idea. But when do you believe this whole Web 3.0 iteration, you could say, of the internet, when do you think that will be normal, like the actual new internet? When do you think it'll hit mass market? Because right now, obviously, it's in its very infant stage. When do you believe that we will actually, as a whole mass market, get our heads around this and start using it just like the internet we do right now?
My actual answer is right now. I'm going to push back on you a little bit and say, yes, it's in its infancy. Yes, these are somewhat emerging technologies, but at the same time, the internet as it stands today is comprised of these technologies, right? Artificial intelligence is the thing that you type into when you go into search on Google. It's the thing that runs all of the ads that are coming to you on Facebook. These are integrated technologies in a lot of the internet that we already use. Now, when we go out and say, okay, well, what about blockchain? When is the average consumer going to interface with blockchain on a daily basis? I can tell you that probably soon, but not in a way that they're going to even know that they're interfacing with, right? So if you're talking again about supplier logistics chains, look at, Walmart has their own chain that is doing supply and logistics, and they're measuring supply times between different pieces and measuring where their products go and watching all of that. That creates efficiencies, that creates differentials in pricing, that creates differentials in the amount of workforce that they have and the employment opportunities that exist in their company and the fulfillment that they need from different warehouses and all of these plethora of things that affect everybody in their daily lives to some extent, right? I'm just talking about Walmart here for a second. But these technologies are already coming in. These technologies already exist. And the fact of the matter is that most consumers aren't going to interact with them in a way that they know that they're interacting with them. We can say the same thing about chatbots on websites. So there's a lot of chatbots nowadays, in today's market that are using AI type technologies. And there's some very simple ones. There's some higher level ones. I know the Google AI one has a recent demo in which they went out and made phone calls to people using their AI and recorded them and went, wow, look at this. Everybody thinks it's a real person because they added a bunch of ums and uhs in the middle of it. So you can actually use Google's AI chat engine as an API. So I can go connect to it right now and make a chatbot. And then that chatbot can talk to people on whatever platform you want. So in that instance, that's something that people are actively engaging with on a regular basis. If you go to your local car dealership's website and it pops up a little chat thing and you start chatting with that person and their answers seem a little bit weird to you, but you don't really think about it, there's a good chance that there's not another person on the other end of that thing, right? There's just a computer that's spitting answers at you. And those technologies are getting better and better to the point where people aren't going to know that you're interacting with that. People don't know that the ads that they see all day long are artificial intelligence. And artificial intelligence is not cognitive intelligence. It's just massive amount of data compiled to figure out what is the best path, what is the path of least resistance through this process, right? So these are technologies that are in place. These are technologies that are happening now. I would say over the next 5 to 10 years, the shift of everything is going to be incredible, right? The pace of change is accelerating, not decelerating. But I don't think this is like a let's wait and see. This is a what is happening today kind of thing. There's actually a really good quote from the CEO of Microsoft Cloud. I'm not sure the exact name of the company they have it under. It's not Azure because they have an entire cloud company that's their Azure product, and then their Office products are all their own separate cloud as well. But his quote is that every company is going to be an AI company. Now, obviously, he's selling AI products, right? He's selling AI as a service because he's running Microsoft Cloud. But there's a lot of truth in there, right? Employing these technologies into modern operating businesses is the way forward for a majority of businesses who want to scale and become something great over the next 5 to 10 years. And the people who lag to do that, the people who fail to do that, are going to be left behind.
No, I 100% agree there, Chris. It's artificial intelligence. It's been around a while. In fact, I used to code artificial intelligence and dabbled in machine learning when I was using it for automated trading systems in a hedge fund over here in Australia. So I was using that almost 10 years ago now and saw the first sort of versions of it. So I've seen a lot of different use cases for it. And now, as you say, artificial intelligence is everywhere. But from the blockchain side of things, wouldn't mind getting your thoughts here, Joseph, on team and what it takes to actually build what you guys are looking to build. I mean, what sort of skill sets are you looking for to build a really high quality team that can pull off what you guys are trying to pull off?
Yeah, that comes back to our founding ideologies. We're founded on a lifestyle by design ideology. I'm sitting here on my sofa with my husky literally sitting on my lap because he thinks he's a lap dog. And we're formed on the idea that remote work and lifestyle by design, so that the people that we attract are looking or at a point in their life where they've had some successes, they've had these experiences, they're past the ego phase of their life, which we all, tend to go through at certain times. And that's really put us in a position to attract very, very talented people who are also humble, very experienced, and they don't have to move. They can be in New Jersey or New York or Denver or Seattle, and they don't have to pick up and move to Phoenix and walk into an office at 8 o'clock and leave at 5. We believe that the workday model is a broken thing, and that the footprint, the ecological, the cost basis footprint, the onerous time footprint on people's lives that the traditional business 8 to 5 model has is broken. And that allows us to reach out and look for and attract people who are self-starters and who do have those experience sets. And mostly what we're looking for is people that are inspired and humble and want to deliver their deliverables without having to necessarily show up and hang around a water cooler. And that's something, building culture in a remote work organization is not an easy thing to do. Maintaining a communication stream is technologically quite easy now. But from an actual deployment standpoint and from a cultural standpoint, it is a challenge. And that's a challenge that Chris and I spent several years in our private consulting company figuring out and working through. For me, I had to work through my own management style issues, and my own expectation issues, and find a way to make sure that we had clear expectations, that we inspect what we expect, and that we know what deliverables are and need to be, and that people and our team can understand that when they accept a deliverable responsibility, they're going to hit that they don't accept more than they can do, which overachievers will tend to do, and that they don't accept less than they can do, which slackers tend to do, right? So you've got this middle ground there, but we've attracted absolutely beautiful, brilliant, talented, artistic people. And the way that I describe that to people through the interview process is that we're looking for artists. I'm looking for artists at graphic design and social media and public relations and coding and all these different levels of stuff that I don't understand, right? You're a coder. Chris is a coder. If we need me to code, we're all in trouble. But I'll structure the hell out of a deal, right? But we're looking for artists, and that's my art. My art is finding incredibly talented people and allowing them to deploy their art without doing the parts of the business that they don't want to do. I give them an ecosystem where the legal is handled, the financial structures are handled, customer acquisition, customer engagement, that these things are handled, and they get to come in and paint with their brush and do their artistic skill and add that value to the organization. And they get to do it remotely. We're all MacBooks and iPhones.
Yeah, and I wouldn't mind just digging into that a little bit more practically. What processes do you have in place to try and build culture with a virtual team? And how do you keep everyone sort of on track and delivering on deadlines and things like that? What are some practical tips you have for business owners that are running virtual teams?
We use a suite of technologies, Asana, Slack, Jira, Zoom for video communications. Face-to-face time is important, right? And understanding people's body language and seeing them and connecting that way is important. We are about to have our first annual in-person meetup for our advisory board and our executive team. And so that's a few days together in person, right? And making sure that connection is there and working on that. But mostly it's about utilizing the technologies that are available. You're somewhere, Chris is somewhere, I'm somewhere else, and here we are recording an interview together. And the technologies that are available today allow this to happen. They allow it to happen in real time around the globe with almost no friction. And so from there, it's a matter of management having a level of accountability and responsibility that can filter through to the teams. Because the first time I miss a deadline, the first time we set out an expectation and never follow up on it, never check back on it, and it gets lost in the woods, we've now created a monster, right? Because people will, even the best people in the world, will caveat to the lowest common denominator, right? And if the boss is coming out and yelling about something on Tuesday and forgets about it by Friday, people are going to recognize that. So from the management side of it, we have to have a very high level of expectation for ourselves and a level of inspecting what we expect that is very, very high level and also very continuous.
Yeah, really good advice there, Joseph. I guess we'll sort of start to wrap this episode up. Is there any other things that you guys would like to go through before we jump off?
No, I just, if you'd like to follow us, we're on Twitter at Lannister Dev. I'm on Twitter at Lannister CEO. You can find us on LinkedIn, Lannister Holdings, and you can, Google us on the stock market, OTC market, NBDR. We're not very hard to find. And thank you so much for having us on today.
Yeah, no worries, guys. It was a pleasure and really, really interesting as well. I'm really excited to sort of see you guys and your progress over the years ahead. It sounds like you're working on something that is really needed. I know how necessary this industry is going to be over the years ahead, and I wish you guys the best of luck and all the success in the world. But yeah, thanks for joining us and thanks for sharing your knowledge and information. And yeah, we'll hopefully you guys knock it out of the park.
Thanks so much for
having
having us.
It's great being on.